Hello everyone, I'm Mark von Grundher, Director of Benham and Reeves. Thank you so much for joining us today. We're going to start in a couple of seconds because it's just gone 2 o'clock in London and 6 p.m. in Dubai and 10 p.m. in Asia. And I'm just waiting for a few extra people to join and then we're going to start. So literally in about 1 minute. Thanks. Right, I think we'll start now. Hello, as I said earlier, to anybody else who's now joined. My name is Mark von Grundher. I'm a director of Benham and Reeves. I'm based in London. And thank you so much for joining us today on our webinar. And today we've got myself. I'm going to host it and do an update on what's going on in the London property market. I'm going to be followed by Chris Frame, who comes to us from Get Ground, who's going to explain about their very interesting solution for property owners. And I'll let Chris, I won't take any of his thunder, I'll let Chris talk that through. Following that, Stuart Leslie is with us. We're very happy to have Stuart with us, who's International Sales Director of Barratt. And he's going to give us a little update from Barratt's perspective. And then finally, we're joined by Eustace Coutinho, who is going to run through a couple of exciting things that Barratt have going on at the moment. And then we're all going to return and answer any questions you've got. So could I just, a bit of housekeeping, we'd appreciate if you use the Q&A function, not the chat function, which should be disabled. But if it's not, please don't use that because I won't look at it and I won't know your questions. So by all means, ask as many questions as you want. I've already got quite a few that we've been asked, but please feel free, any property related questions that you want to ask. So as I said, I'm here today to do an update, quick update on what's happening here in London. As we emerge from life in lockdown, the property market continues to surprise us. And can you believe that London house prices have climbed 6.2% since we went into our first lockdown a year ago? That's the first house price rise during a recession in modern history. In fact, while GDP fell by 10%, the total value of London property actually increased during the pandemic to £1.8 trillion. That's another first. And where GDP and house prices diverge to such an extent. And for me, that's a clear endorsement of the resilience of London property. Well, the year got off to a great start as the average cost of a London home rose above £500,000 in January, with buyers desperate to get the zero stamp duty. Halifax Building Society showed that a year after the first national lockdown, UK house prices in March were 6.5% higher. And I think that's quite remarkable. Rightmove, the UK's biggest property portal, showed average asking prices rose 2.1% in April, and that's the second time in the past 5 years that it rose so much in a single month. And almost a quarter of the sales were properties on the market for less than a week. This was the strongest spring sellers market in 10 years. Rightmove actually called it a buying frenzy. And let's remember, this is during a lockdown. Zoopla, who are the other major portal, they showed the recent budget caused an 80% spike in buyer demand. Meanwhile, the supply of new homes for sale this year is down 13%, which is clearly a key driver for rising property prices. Data from research company Lonres found that Q1 had the highest number of sales for Q1 since 2016, when investors rushed to buy before a tax increase. All price brackets recorded an annual increase in sales, but the market under £1 million was busiest, with a 52% increase in the number of properties sold compared to the previous year. This was confirmed by Land Registry, which revealed a surge in transactions in February with over 147,000 property transactions, which is actually 48.5% higher compared to February 2020. And that was partly due to completions before the original stamp duty holiday deadline. Spring is always the busiest time for London property, and in spite of reduced stock levels, in the first week of March, the number of sales that we at Benham and Reeves agreed was up 12% in 2019, and valuation requests were up 27%. And our own research is showing that since the first lockdown, there's been about 1,000 sales in London, with 65% more sales across the outer zones. And my favourite stat is what the super rich are doing. You know, they've been buying up London more than any other city in the world, lured by the weakness of sterling and the conclusion of Brexit. And in spite of the travel restrictions and 3 lockdowns, international buyers spent almost $4 billion on properties in London, over £10 million, which is more than any other city, confirming London's status as the world's leading wealth destination. Things in London are really quite good at the moment, with the stimulus measures in the budget, including the extension of the stamp duty holiday and government-backed 95% mortgages, historically low rates supporting affordability, the world-leading vaccine rollout, and the detailed roadmap out of lockdown. And these have all resulted in a renewed confidence, and I'm personally confident too that the activity will remain buoyant for the foreseeable future, as savvy investors recognise this is a real window of opportunity. If activity does slow, the severe lack of stock will prevent price drops. And for me, the headline in the Times, which actually I had to read a couple of times, said it all. Housing stock is likely to run out in the next 2.5 months. Can you believe that? Those who worked throughout the pandemic simply haven't been able to spend their money as they've been stuck at home, inside, which according to the Bank of England has led to £100 billion in savings, which will get spent. And a lot of people, the top priority for them is finding the perfect home. So turning to the rental market, across our 18 branches, we've been really busy over the last year. And in fact, we saw a 19% increase in inquiries during March this year, although there continues to be excess supply due to reduced travel, with short-let properties offered for long-term, leading to subdued rents and slightly longer void periods. But, and I've always said this period is temporary, and we are now seeing rents stabilising. Albeit slowly, we think they will start to slowly increase. And as London reopens, we expect a recovery of the lettings market and rents returning to pre-pandemic levels. It's inevitable, however, that lockdowns have forced people to reassess their needs. And so we did a survey recently of 3,000 tenants. We did it actually last October, and we compared it to the October the year before, and it threw up some quite fascinating insights, which you can see on the slide. You know, proximity to green space was flagged as more important than travel, as people see working from home as the future. High-speed internet is top of our tenants' wish list now, closely followed by outside space. And we think these trends will feature for the long term, so investors should bear them in mind. But why London? And that's a really important question, and you shouldn't lose sight of what really matters. London has proved time after time it's an extremely resilient city. London's an international hub for business. It's the city's strong economy, thriving business outlook, and prosperous jobs market that are the main reasons why people choose to live here. London property is a bulletproof investment. It's always been the safe haven and one of the world's most trusted asset classes. Remember what I mentioned about the super rich? And its ability to deliver a regular income and long-term capital gain, even in times of wider uncertainty, London property is the place to invest money in a stable asset class with low volatility. You know, London leads the way with the highest concentration of financial and professional firms in the world. It's a leading tech hub. It's a leading global academic hub, consistently ranked as the world's top student city. And overseas students are a key part of the market, with London universities welcoming the highest number of international students in the world. You know, you look back at the doomsday scenarios predicting a mass exodus from London, well, they were all simply wrong. And in fact, people searching for a new home in London was actually 10% higher during lockdown than it was the year before. And a recent study by the LSE, London School of Economics, revealed that there had been zero evidence of any exodus of office workers. You know, London property is an attractive investment. Remember what I said about the super rich. And this is echoed in Knight Frank's 2021 wealth report, which revealed that 26% of ultra high net worth people plan to purchase London property in 2021. So my favorite question is, why should you do it now? And why is now the time to buy? Well, if you can afford it and you're ready to make the investment, then that's the time to buy. And with interest rate cuts last year and the Bank of England base rate at only 0.1%, borrowing has never been cheaper. In addition, developers are now offering good deals, as some have completed units which they need to sell. And even though sterling has appreciated a bit, it's still below pre-Brexit levels, which is a real advantage for international buyers. And that's why I really think this is an opportunity to buy, a great time to invest. So turning to our predictions, most researchers have upgraded their forecasts for 2021, mainly in the wake of the surprise pandemic property boom. Savills previously forecast flat house price growth this year for 2021, but are now saying 4%, which we concur with due to the speed of the vaccine rollout, the relaxation of the social distancing measures, and government support for individuals and businesses. Prime Central London is good value after 6 years of price adjustments, leading to expectations that the prime Central London market should see a 7% increase in 2022. Similarly, Knight Frank increased their forecast again from 0 to 5% this year, and they expect London prices to rise by up to 20% by 2025. And even with all this positivity that I'm talking about, it's still important to target your investment to get the best return. And apart from price and location, you should consider yields, potential for capital growth, whether it's a regeneration area, and the reputation and track record of the developer. And the 3 keys to success are meticulous planning, on-the-ground knowledge, and a trusted independent partner. And frankly, that's where we come in. And just a little bit on Benham and Reeves, for those of you that don't know us, we've got 60 years of experience in the London property market. We today have 18 branches in London and 8 more internationally, including Hong Kong, Singapore, and Claire works for us in Dubai. Our focus is always on our clients to help with anything clients need. And today we offer a complete one-stop service. And that's from investment advice of what to buy and where to buy. Then we handle the handover and snagging for you, so you don't have to travel to London to take over your apartment to collect the keys. We do that for you. We do furnishings, and if it's getting a little old or second-hand, then we can do refurbishment for you and deal with the lettings, rent collection, property management, and even tax returns. And everything that we do in-house, so nothing is ever subcontracted. So we never get let down. So in turn, we don't have to ever let our clients down. And another unique difference is that we, and that's myself, my co-directors, and our senior people, often invest alongside our clients in the same developments and locations, putting our money in, clearly demonstrating our belief in what we recommend using the exact same research process. You know, I really believe we're going to look back and view this time as a unique opportunity, a time when people have panicked unnecessarily and tried to get out. But those who've taken a longer term and an eye on the bigger picture will make some really good investments. So that's my update on the market. I know it's very brief, and feel free to ask any questions that you like. Now I'm going to pass over to Chris Frame from GetGround to run us through his exciting offering. Thank you very much.
Thank you, Mark. Thank you very much for hosting today. And there's some incredible information, statistics even within that presentation. So thank you very much for that. Good afternoon, good evening, everyone. My name's Chris. As Mark mentions, I'm the VP of Growth for GetGround. Personally, I'm based in Singapore, where we've obviously got an office here. We also have another office in Hong Kong, and then our headquarters are based in London in the UK. So very much hopefully covered from a time zone perspective to talk to any client, wherever they may be based. In terms of GetGround and who we are and what we do, we specialise very simply in setting up and then running UK limited company structures for the sole purpose of buying investment property within the UK. So first and foremost, our services only really benefit those that are buying for investment purposes, most traditionally buy to let, and indeed those buying property in the UK market specifically. In terms of what we've actually done, we've looked to create a solution, an online platform that can be accessed remotely from anywhere, anytime, all done online. And we've done so by removing the two prohibitive factors that used to exist when using limited company structures. It used to be a very costly process to set up a limited company structure, and it used to be a very costly running costs, were very, very high to run that limited company each and every single year. And it was also a very time consuming process. On the setup side of things, it could often take weeks, if not months, particularly for those clients based outside of the UK, and then a very time consuming process to run that limited company each and every year by undertaking all of the ongoing financial administration that's required. And it's really those two key things that we've removed from the marketplace. We've created a solution that can be accessed very quickly. It can all be set up online in 20 to 30 minutes. And then thereafter, we actually take on all of the ownership responsibilities of that limited company. So in terms of what we actually do, I guess the services we offer are split into two parts. There is the creation and the company setup element. And for that, we will create and open a brand new UK limited company. We will then register that limited company with Companies House, which is the regulatory body in the UK. We will structure that company on behalf of the investors as per their own wishes. We will then produce and verify all of the legal documentation around that limited company structure, and indeed that allows that entity to actually undertake the activity in question, i.e. the buying and holding of UK property. And then finally, we will also open up a UK financial account for that limited company. And as I say, all of that can be done online within 20 to 30 minutes. From a customer perspective, the company would be incorporated within 24 hours, and then typically the UK bank account would be open 48 to 72 hours thereafter. Once the limited company has then been incorporated, will we then take on, as I mentioned before, all of the ongoing management of that limited company with regards to the financial administration. That includes all of the accounting, the tax filing, tax auditing, bookkeeping services, the company tax returns. We act as the UK registered office address, and we also undertake the role of the company secretary. Important to note, as company secretary, we have absolutely zero ownership of that limited company. We are simply there to run the limited company, administer that limited company, and also to make sure that it's done in a compliant and regulated manner. So in terms of why individuals and why investors are using limited company structures, and I think these benefits have been around for many, many years, and GetGround fundamentally are not actually changing these benefits that do exist from using limited company structures. We are simply making them more accessible and done so on a more cost-effective basis. There are a number of benefits that do exist. The one that typically gets the most amount of attention is the greater levels of tax efficiencies. Realistically, they help create an increase in your profits, they help maximize returns, and they increase or create a more positive cash flow. So all in all, good things for an investor. I'm just going to pause on the tax efficiencies for now and come on to those a little bit more on the next slide. Just a couple of the other benefits just to highlight before going on to those is firstly, there is a reduced personal liability if you do use a limited company structure. The reason for that is that the company structure we open is its own legal entity, and that entity takes ownership of the property, but it also takes on all of the debt and all of the liabilities of that particular property and of that asset in question, and therefore reduces an individual's personal liability, but also offers them significantly more protection, and particularly in line with everything that has been going on in the last sort of 12, 14, 15 months or so, we've certainly seen a lot more value placed on that particular benefit from investors. It is a mechanism that makes it very, very easy to buy and sell with multiple persons. The main reason for that is that the company structures we create, they all have 100 shares, and those 100 shares can be divided in and amongst the shareholders in any way they see fit. So it makes it very, very easy to allocate and proportionate a certain level of ownership to each individual. It is also a mechanism that makes it very easy or improves estate and inheritance planning purposes. Firstly, must mention these limited companies are obviously not tax avoidance schemes, but the use of a limited company structure does create greater flexibility, and you create mechanisms in place to help mitigate and or reduce any potential liability. On the subject of inheritance planning, it's often better to speak to individuals about their own certain situations, which I'm obviously very happy to do so. But that greater level of flexibility and then the easy route to make it very easy to change the ownership levels helps reduce and mitigate any potential liabilities in the future. And then finally, there is now a very well developed mortgage market when it comes to lending to limited company structures. I mentioned earlier on that we have removed the two biggest factors around company structures, namely one of cost and the time involved. The third biggest change over the last sort of 5, 7, 8 years or so is that there is now a far more developed mortgage market. And in fact, in 2020, there was some research undertaken that showed that over 41,000 buy-to-let investment properties were bought using a limited company structure. So a significant increase for the year before, and a very high percentage of all investment transactions. And as a result of that, a lot of lenders have innovated and moved into that space, making the marketplace more competitive, but also increasing the number of options that are available. And then on the right-hand side is a screenshot taken from an audited tax example that we have. And again, I'm very happy to share that with any individual that requires that. And in that audited tax example, it shows the benefits of using a limited company structure created by GetGround, showing that for non-UK residents, it is possible to increase post-tax profits by 52 to 66%. For UK residents, the range is slightly wider from 23% to 66%. And the reason for that is just the way taxes are differently calculated. Now, the main reason that those financial benefits come are from those tax benefits that I touched upon earlier on. And again, very happy to go into a bit more detail individually with individuals as required. But generally speaking, those tax benefits exist during the ownership period and during the exit of that particular investment. So first and foremost, on entry, there will be no difference to using a limited company structure or buying in your own personal name if you are buying for investment purposes. And I mentioned earlier on that our services are only really applicable or beneficial to those buying for that reason. So on entry, there's no financial advantage or disadvantage using a limited company structure. The two primary benefits during the ownership period is, number one, you still have the benefit to offset your mortgage against the income that that property is generating. And that can be quite a significant saving, particularly given that the mortgage rate, the mortgage interest is typically the highest associated cost with that particular investment. So having the ability now and still using a limited company to offset that against that income can significantly reduce the perceived profits of that limited company and therefore any potential income tax liability. And you now no longer have the ability to offset that mortgage interest in your own personal name. Following on from that particular point, there is then multiple ways to very efficiently withdraw income from that limited company structure. Again, this will potentially differ subject to where an individual is actually based and what their nationality and what their residency status is. But generally, the two main ways are either by way of dividend income, and for non-UK residents, there is 0% income tax on dividend income. So it doesn't matter where anyone is based, but there is 0% income tax in the UK on dividend income for those based overseas. And then the second option is by way of what's called an owner loan repayment, and that is available to both UK residents and non-UK residents, but the same net effect, i.e. there's zero income tax liability on both of those mechanisms. And then on exit, there are also a couple of benefits that exist when using a limited company structure, notably around lower exit costs when you come to sell. If you do buy a property in your own personal name, then should that property go up in value, and given all the market trends and the market data, that's very likely, as Mark's obviously touched upon, in your own personal name, that capital gains tax is either 18% or 28% of the gain that is realised by that particular asset, subject to which tax bracket you fall into. If you do use a limited company structure, then there are two options available to you when you come to sell, when you come to exit this investment. Firstly, you can sell the shares of the limited company structure. And if you do that, then there is a reduced capital gains tax liability, either 10 or 20%, again, subject to the tax bracket you fall into. There is also a secondary benefit if you do sell the shares of the limited company, and that is that the incoming buyer does not need to pay any stamp duty. And that creates a scenario either for the seller of a price advantage in the marketplace, given that most other properties at that same value would incur stamp duty, or, and this is what we've seen more commonly, the ability to further negotiate with the incoming buyer and potentially increase the price by creating a win-win situation where the seller can sell for an increased selling price, meanwhile the incoming buyer is still saving money. So there is the potential possibility there to increase the gain that is being realized by this investment. So that is one option, and then the second option is to sell the property outside of the limited company, and in that scenario you pay no capital gains tax and instead pay a flat rate corporation tax, which is 19% currently. And it's really those sort of 3-4 primary benefits: the ability to offset that mortgage interest, the ability to then very efficiently take money out of the company, and then the access to lower exit costs that create that financial benefit when using a limited company structure. And then just my final slide, just very quickly on our fees. We have a one-time setup fee per limited company, which is £500, and that includes all of those setup services that I mentioned, including the opening of the company and including the opening of the financial bank account. And then thereafter, we have an ongoing running cost of £20 per month, and that includes all of the accounting, tax filing, tax auditing, all of the company secretarial services, and indeed our registered office address services as well. We operate about 8 to 10 times more cost effective than the traditional alternatives. The main reason for that comes by way of technology. We use technology to automate an awful lot of the processes. And then the second element is that one of our key investors is actually the UK government, and that has allowed our platform at the front end to plug into Companies House, and then at the back end into HMRC, which is the UK tax division. And therefore that has enabled even further levels of automation to enable us to keep our costs very, very low. I'm aware there's a sort of a Q&A session at the end of that, so I'll pause there. Hopefully that's provided enough information for some, and maybe happy to answer any questions once I've passed over to Stuart and to Eustace.
That's great. Thank you very much, Chris. Actually, there have been a few questions, and I think we'll address them at the end. I'm sure there'll be lots for Stuart and Eustace as well. But Stuart, do you want to pass on and give your update on Barratt, please? Thank you.
Good afternoon, everybody. So thanks for joining us on this wonderfully informative webinar, and thank you to Mark and his team for hosting this afternoon, this evening, or today, wherever you might be. So for a brief introduction, Barratt Homes is the biggest developer in the UK by volume of sales. So we are currently delivering approximately 17,500 properties per year across the UK. We're sitting in London at the moment and representing the Barratt London portfolio. You can see we have currently 13 live sites across the UK, across London. Predominantly zones 3 to 5. We do have Western Circus in zone 2, which Eustace will go into shortly. But we have across the portfolio approximately 9,500 properties under construction across London. As Mark hinted at, the interest from the market currently is towards that lower price product in areas where there's more green space, and particularly with amenities on site as well. So it's really, we are in the prime area for the market demand at the moment. So dealing with that number of customers, we get a really strong feedback on the market fundamentals and what's going on in the market at the moment. So as Mark has already mentioned, we have a stamp duty holiday at the moment, which has been extended to the end of June. So we're seeing a massive increase in inquiries for people wanting to purchase the remaining plots that are completed, ready for occupation in June and July this year. The government-backed 95% mortgage was launched this last month, and Boris Johnson was on one of our sites in Gloucestershire to launch the scheme. It has allowed more people to get onto the housing market, which has again increased the demand for properties, especially at that more affordable level of the market. So across our purchasers, 35% of our annual purchasers are private buyers and investors. So they're actually looking to purchase a property and rent the property out, whether it be through Benham and Reeves or themselves, to take advantage of the strong rental markets across London as well. Mark also mentioned that at the moment we're in a historically strong lending environment. And so we're able to achieve extremely good extremely good interest rates of 2.46%. on an average 2-year fixed rate, 85% loan to value mortgage. Now, most of our investors from overseas will take a mortgage of approximately 60 to 70%, but those products are available, and particularly for people wanting to move to the UK or already resident in the UK, the lending market is extremely strong at the moment, and the banks are bringing more and more products into the market, particularly around that 95% mortgage level. So we've seen increased interest from Asia, particularly from Hong Kong. I'm sure you've heard about it in the press. The B&O visa program offering 5.4 million Hong Kong residents eligibility to move to the UK. We expect over the next 5 years, there will be hundreds of thousands of purchasers looking to buy a property or a home in the UK. But we've already seen a massive spike in inquiry from people looking to purchase affordable homes in good quality build and specification in areas where they want to either send their children to school or to have a convenient place to commute into work. And I know that the trend at the moment is towards areas that have more green space, but certainly as the vaccine rollout has continued at such a pace, we are seeing things returning to normal, both in the economy, but also in day-to-day life in the UK. And we are seeing people wanting to move back into offices, wanting to have that community around their work, and being able to have the interaction of personal meetings. So I'm sure that location and transport will still remain a key driver for people choosing a location to purchase a property. So we've always chosen areas that will increase in either through regeneration or infrastructure improvement. And certainly one of the key infrastructure improvements going on at the moment is the Victoria line, the Elizabeth line, which will run as a crossrail from east to west London. So it will improve the accessibility both from Heathrow, but to the city and to further afield, making that more accessible to people living in zones 3, 4, and 5. We've also seen UK trade deals with Singapore agreed at the end of last year. And just earlier this week, the UK government announced a trade deal with India. So all of these things are driving extremely strong demand from overseas and a continued interest for people to purchase property in London, whether it be for second homes, to send their children to educate in the UK, or just purely for investment. So as you can see, we have a government target of 300,000 homes to build per year. And as an industry, we're the biggest home builder. We're delivering over 17,500. And as an industry, we're delivering just over 120,000 properties per year. So that really highlights Mark's point earlier that the supply is really going to be constrained over the next 6 to 12 months. We do have an attractive land market, and we're in the process of purchasing 14 more sites at the moment, and we have active bids across several different sites in London at the same time. Just a little bit of insight into the overseas demand. So, a lot of our product is sold to UK residents and people living in the UK, but we do see significant interest from overseas, particularly Hong Kong at around about 7% of our annual sales, and Singapore at around about 4% of our annual sales. As these markets open up overseas, and travel corridors hopefully will be announced later this month for green countries to be able to start traveling, we will welcome more people into the UK. And there is a pent-up demand, whether it be from the UK, as Mark mentioned, with the savings with UK residents. The same thing is happening with investors overseas who have been unable to invest in asset classes that they normally would do, such as London property. So we're really excited to be welcoming people into the UK marketing suites at the moment, but also really excited to see those travel corridors open and welcome people from overseas back into the market. So that's a little bit of an overview of the fundamentals, hopefully that give you some insight into where we are as a business at the moment. I'll hand over to Eustace, who's going to take you through a couple of our sites and introduce you to some of the best investment opportunities in London at the moment.
Thank you, Stuart. Thank you for that introduction and some pretty good information there. So myself and the team at Benham and Reeves, we spent a lot of quality time and tried to brainstorm and come up with the 3 top projects that we could offer to you all today. So we've actually listed three sites that make most sense. First of which that offers the highest yield. Second, which has a blend of the lifestyle, good yields, and capital gains. And the third, of course, being having a lot of Middle Easterns on the call, the site that's closest to central London. So by the end of this, you'll have 3 options to choose from, and you can then do a one-on-one call with myself and Benham and Reeves. So to start with, I'm going to present to you Hayes Village. So Hayes Village, as you can see in this map right here, is a Zone 5 property located close to Heathrow Airport. But a lot of people that live in Hayes Village are not entirely dependent on the travel time to central London. In fact, a lot of people that live at Hayes work at Heathrow Airport. Heathrow Airport employs 70,000 people, and we expected Heathrow to go through an expansion at some stage. Not only do you have Heathrow, but you also have the Golden Mile. You have Austerley Park, where you have multinational companies that have set up base right there. But one of the key reasons why we've chose Hayes Village as one of our highest yield and one of the best investments in our portfolio is simply because of the 13 sites that we have. It's the closest to the Crossrail. And of course, the Crossrail is one of the most exciting projects in the UK right now, and completing Q1 2022, pretty much the same time as the phase that we have to offer at Hayes Village. So a quick history about the site. So this used to be a chocolate factory owned by Eugene Sandow, a superstar on the Charlie Chaplin show, which was later then acquired by Henry Nestle. And it's quite a historic site because this is where instant coffee and white chocolate was invented. I mean, I have stories from customers where they grew up in the neighborhood, and they told me about the times they could smell chocolate every time it rained. So it's quite a historic site and definitely an incredible story. We then acquired the site in 2014, and we started selling our first phase in 2019. We've sold the first block, which is Thornton Apartments, that I'll get into a bit more detail. But here's a picture of the view from some of the apartments at Nestle. It gives you a good glimpse of the sort of greenery that you have at Hayes Village. So it's a very well-balanced lifestyle. You've got the convenience of the station, But then again, it's one of the few sites that we have that has 40% greenery in the community. So here's a look at the travel time once the Crossrail is up and running. So by Q1, Q2 next year, you can get to Bond Street in 20 minutes, Liverpool Street in 27 minutes, and Knightsbridge in just 15 minutes. So evidently the Crossrail is a complete game changer. And this is one of the key reasons why we recommend our investors to look at properties close to a Crossrail, because it's without a doubt going to get you good capital gains and very consistent rental yields as well. As for the amenities on site, we have a residence gym, which happens to be in the current phase that we are currently selling. We have a planned cafe. We've got a community gym. We've got plenty of children's play areas on site, a canoe club, given the fact that you have a canal by the development. We have extensive gardens as well. So here's a closer look at the master plan. Let me put my pointer on so I can take you through it. So here we go. So we've launched the Thornton Apartments, which is this block right here to the right. Our current phase is the Nestle Apartments, many of the units overlook the Wallace Gardens. So it is definitely one of the featured blocks of the site because we've restored the Art Deco building, and we've got lovely pictures, and I'm happy to take you through the virtual tours on a one-on-one basis. But a lot of the units come with parking, and in our current phase, we have quite a few 1 and 2 beds. We're sold out on the 3 beds. So here's a look at our current price list. So we have 1 beds that are pretty big. I mean, some of which larger than average, starting at 539 square feet up to 600 square feet. And the starting price of these is £345,000. And you might have noticed the ceiling height. This is something we'd like to highlight at Hayes Village. This being an Art Deco building, the ceiling height is definitely higher than usual, going up to 4 meters. The completion of Nestle Apartments is Feb 2022, pretty much the same time as the Crossrail. So it works out pretty well for you investors looking to cash in on the capital gains. And the 2 beds are priced at $442,000, also completing Feb 2022. So for our next site, we have Millbrook Park. So this year is the lifestyle development. But then again, you have the convenience of getting to central London in under 30 minutes. So if I could summarize Millbrook Park in one word, it would be balance. And no better image to describe that than this one right here. You have the perfect lifestyle of having a golf course literally 5 minutes away, the tube station, a minute walk, equestrian clubs, a shopping center, and the convenience of getting to central London in just 18 minutes. So with Millbrook Park, you have the Mill Hill station, which is literally opposite the site, which has 2 lines. So one of which goes to Bank and Euston in 21 minutes, Bank in 32 minutes. And you have another line which can get you to Tottenham Court Road, where a lot of you can go shopping in just 25 minutes, and Waterloo in 31 minutes. And in terms of driving, you're tucked in between beautiful town centers like your Finchley Town Centre and Mill Hill Broadway, where you have beautiful high streets if you decided to visit one of the local cafes and restaurants. So in terms of amenities and the lifestyle, so there's plenty of things to do. The borough of Barnet's one of the most desired boroughs to live in, simply because it's very family oriented. It's one of the safer boroughs. But some of the key things I'd like to highlight is you have a Waitrose supermarket 5 minutes away from the site, Virgin Active Gym bang opposite, literally a 3-minute walk. And one of my favorites is the Brent Cross Shopping Centre, which is one of the largest shopping centres in Northwest London, where you have plenty of retail, and this is expected to go through a massive expansion, driving prices in the medium to long term. But one of the key reasons why people love to live in Mill Hill and of course the borough of Barnet And even investors, this is a good reason for you to look at the Borough of Barnet, is because of the schools. I mean, if it's two things that people look at when they buy properties in London, it's the travel time to the tube station and of course the schools in the neighborhood. And Mill Hill pretty much tick marks both those boxes. So here's a closer look at the master plan. And to your right, you have Iris Apartment, Fox Club, and Primrose, which have been launched, sold, and handed over. These are completed. So we've made tremendous progress on site as compared to some of the competitors close by. We've completed fairly quickly. In fact, our current phase, which is Brooklime, Buttercup, Violet, and Ivy, a lot of which complete this year as well. We have a rental guarantee scheme of 5% yield for 3 years, which includes a furniture pack at Violet Apartments and Ivy Apartments. This is something Mark will take you through in a bit more detail towards the end, but I think it's an amazing scheme to look at, especially for you overseas investors. It saves you a lot of time and money coming into the country, finding an agent, and of course, furnishing your apartment. So a closer look at some of the details. So the length of the lease is the longest lease you can get. It's 999 years. In terms of the service fee, you're looking at around £2.8 per square foot on the 2 beds, and the 1 beds at around the 3 mark per square foot, which is an annual fee. Our reservation process is pretty straightforward. It's £2,000 reservation fee, 10% on exchange, 90% on completion, which for a global standard is a pretty attractive payment plan. So here's a look at the price list. So our 1 beds, which are 559 square feet, but then again, you've got some ground floor units, which are terrace units, go up to 641 square feet. So we've got some pretty large 1 beds in there, priced starting at £434,000 up to £455,000. And this year is the Ivy Apartments. And we have the 2 beds priced starting at 575 and go up to 600,000 for the larger units. So for our next site, which is the one I did mention earlier, it's the one closest to central London, but then again, a good investment and good early bird opportunities on the prices is Western Circus. This here is in East Acton. I'm literally on the site right now in the show apartment. It's a beautiful location. You're only a 4-minute walk to the tube station and a 10-minute walk to the Acton main line, which is the Crossrail station. But some of the key things I'd like to highlight in terms of regeneration, you're a part of a £10 billion regen, which is the Old Oak and the Park Royal regeneration, which will eventually lead to 25,000 new homes, 15 billion pounds worth of investments, creating around 65,000 jobs. So it's an incredible regeneration to be a part of. And of course, we're expecting Imperial College to set up site not too far from here as well. So connectivity, when I talk about Western Circus, I think connectivity is key. You're literally a 4-minute walk to the central line, which can get you to Shepherd's Bush Mall. Then again, the largest shopping mall in West London in just 6 minutes, Oxford Circus in 18 minutes, Bank for all the city commuters in just 26 minutes. But not only that, you have access to the Crossrail as well. And like I mentioned earlier, the Crossrail is a complete game changer. Your current travel time to Bond Street, which is 27 minutes, would be just 9 minutes. Liverpool Street, which is 41 to just 16, and Heathrow Airport, which is 44 minutes to just 18 minutes. So a quick summary about the site. It's a Zone 2 site. It's a gateway to Ealing. I mean, the prices in the neighborhood can be quite steep, but with Western Circus, you have a good opportunity with the prices, which I'll take you through shortly. You have a car club on site. You have a Virgin Active gym not too far away. You have a beautiful courtyard in the middle, in the center of the development. The rental, the average rental on site is £16.50 per month, which can get you up to a 4% average yield. But then again, we've got the rental guarantee scheme on this site as well for 1 year, which includes a furniture pack. So here's a look at the master plan. So we've launched pretty much all the blocks that you see here because we had an incredible response from the overseas market. Soleil Apartments being the tallest block, which is 19 floors. Vargas then is 12 levels. We have a total of 222 apartments. We have a little supermarket on site and a car club, and of course, 576 resident cycle spaces as well. So here's an interesting slide which gives you a glimpse of the kind of views that you would have from these apartments. And as you can see, it's a pretty fantastic view from every direction. You have the Savoy Suites student accommodation in front of the apartment. That's an indication that there's obviously a demand for student accommodation. You have the King Fahad Academy on your right, but beautiful views across all the way to London City. And in terms of the prices, so the one beds, we have one beds as low as 484,000, which is incredible value for money for a Zone 2 property, completing Q1 2022. And as for the two beds, we have two beds priced at just a single two bed for the matter. It's the last two bed we have, plot 365, which is priced at 600,000. And we have a few three beds still available, priced at 735,000, also completing summer 2022. And a quick summary of who we are and why Barratt London. So we've been in the business for 62 years, delivered 550,000 homes. We're the only national developer to achieve the 5-star rating 12 years consecutively. So we evidently have a really good reputation in the business, and we've won over 84 Pride on Job awards, which is pretty much like the Oscars in the business. So that's all from me for today, and I'm going to hand you over to Mark, who's going to take you through a bit more about the rental guarantee scheme.
Thank you very much, Eustace. That was very interesting, actually. And a couple of questions, in fact, just one question someone asked at the beginning is, do we think the Elizabeth line, when will it come in? But I think Eustace answered that, so that's quite helpful. Just very quickly on the rental guarantee scheme. So as Eustace said, Barratt are offering a rental guarantee on all of the three schemes that Eustace has talked about here, and that is a 5% rental yield that you will get paid from the day of completion. But actually, unlike most developers' schemes, Benham and Reeves are actually going to be the ones underwriting this and paying the rent to you. So the day you complete, we will pay you 5% on a monthly basis for the term of the rental guarantee, whether that's 1 year or 2 year, depending on the scheme in which you invest. And this just gives you flexibility that you complete. You don't have to worry about leaving some money in the bank account in your bank account to pay the mortgage. If you have a loan, or if you don't have a loan and you're relying on it for income because it's a pension or just your income, then you get that from day one, because there's always a slight lag when you complete. Number two, they give you a furnishing package, which is done by Install Direct, which is our sister company, so that it means that your flat is furnished, ready to go for a tenant to move in. We take the risk of finding a tenant. We just pay you the rent. And then at the end of the term, if our tenant is there, the end of the rental guarantee term, sorry, if our tenant is still there, then they continue paying the rent to you. They will pay the rent to you directly, or if we need to find you a new tenant, then we would do that for you if you want us to. But there's no tie-in with Benham and Reeves at the end. You can go and use any agent that you want. Obviously, we'd love to help you. But it's a very easy solution that Barratt and Benham and Reeves put together for their investor clients. And so if you've got any questions on it, feel free to answer. But that's just a very quick explanation of it. You would get 5% of your purchase price. So it's 5% of whatever you pay. So now I think everybody's going to come back and we're going to try to answer some of the questions that we've had. I think one question that I just saw, which I thought was quite interesting, actually, it was addressed to Eustace, but is it now standard practice not to have a parking space allocated? Eustace, do you want to take that from Barratt's perspective?
Sure, I could, Mark. I mean, I wouldn't say it's standard, Mark. Well, every site, like I said earlier, we've got 13 live sites at the moment, and every site has a different circumstance when it comes to parking. With Millbrook Park, we have allocated parking with every single unit. With Hayes Village, well, we do offer parking based on request and requirement. But with Western Circus, given the fact that it's in zone 2 and it's increasingly difficult to get parking, we do not offer parking on site. We just have a limited amount of blue badge parking for wheelchair access and blue badge parking. That's about it at Western Circus.
That's interesting, because I think the thing with parking is, generally speaking, if you're buying a smaller unit, 1 bedroom or studio, generally we would find that people don't use the parking space, and that goes for a lot of 2 bedrooms too, because if it's 2 sharers, they're both working. But not all schemes, and the question was, is it standard practice? I think there's a big drive, isn't there, Eustace, from councils not to allow parking. So
absolutely. I mean, there's a huge drive to limit. I mean, all I can say is, Mark, while we do have parking on several of our sites, well, you might as well take advantage of it, like we do at Hendon Waterside, at Ridgeway Views, at Millbrook Park. But yeah, as you get closer to central London, it's increasingly difficult. And we're starting to see the same with sites as far as zone 3 and zone 4 now.
Okay, great.
Yeah.
That's great. So Chris, there have been quite a few questions after your interesting talk about owning in a company. So one question we've been asked was, can I move my current property owned in a personal name to Get Ground?
The short answer is yes, you can. The sort of slightly longer answer is that it would need to have a bit of further discussion, because there are significantly higher costs involved that more often than not make it not justifiable. And the reason for that is that if you already own a property and if you've completed on the property, to move it from personal name into a limited company structure, HMRC would see that as a sale, and therefore that would definitely trigger stamp duty payment being required again, and potentially capital gains tax, subject to when someone bought that property, how long they've owned it for, and obviously then the performance of the asset. So what we tend to find is anything pre-completion, absolutely you can move into a limited company. Sorry, if you find a property today, set up the company, then exchange contracts and then complete, that is the most simple way and probably the most clean way of doing it. If you have exchange contracts in your own personal name but wish to put it into a limited company pre-completion, that is possible, and generally the full benefits of a company structure remain. Post-completion, like I say, it just becomes harder to justify. We're very happy to do some numbers with some customers that were helpful, but it just typically hard to justify.
Another quick question they ask, is there an age restriction on shareholders in one of your limited companies?
So there is a UK law which shareholders must be a minimum of 18 years old, and then they must also hold a minimum of 1 share. They're the only 2 caveats around the shareholding requirements.
Okay, good. I notice we are getting tight on time, but we're going to run over for probably 10 minutes and answer a few more questions. Here's a good question, Stuart. This is definitely for you. So, and I'll happily help it as well. Do we think house prices are going to go down after the stamp duty holiday finishes? You know, is there going to be some kind of cliff edge for property values?
Mark, we get asked that a lot, and what I would say is, so any headlines, whether it be SDLT or any other tax reforms, do tend to hit the headlines. But we've seen this several times before, and the previous reform to stamp duty had very little impact on the long-term fundamentals of the market. And I think what people really hold on to is the long-term return on investment, particularly strong rentals and capital appreciation. When you look at the slight increase in acquisition costs, it doesn't offset the long-term gain. So, you know, whilst there is opportunity to save on stamp duty, of course, that's where we're seeing a lot of our inquiry for completed plots. But the fundamentals of why people are purchasing into London remain very, very strong.
I totally agree. And I think there's a shortage of property, let's be honest. So I think, you know, I don't think there's any cliff edge coming now. I think it's been managed quite carefully. I don't see any cliff edge. So that's quite interesting. Thanks for that. The next question is, I mean, maybe, I don't know, maybe everybody's got a view on this, on mortgage rates, is how easy it is. How have you found your customers are getting mortgages at the moment, Stuart? Are there any issues with getting mortgages on the rates or with valuers?
No, I think what's really important when you're going to purchase property with a mortgage is that you use a strong mortgage broker to package your application appropriately. We all know that the banks need to lend money to make money from their mortgage products. And we've seen certainly a massive resurgence since the markets have started to open up, and as the vaccine rollout has continued for banks to uplift the number of people that they have underwriting products. So that's helped with processing times. But I think that the values have remained extremely strong, as you've said. You know, whether it's us seeing the strong appreciation of prices, or whether it's the increased demand from all these overseas markets. And in addition, the UK market as well, where you're seeing really, really low borrowing rates consistently. And this is going one way at the moment. There is more support for better mortgage conditions with the 95% loan to value from the UK government, but also commercial banks are becoming more and more competitive, particularly with overseas purchases as well. So whereas a few years ago there was a big difference between a purchaser either purchasing in a company or by themselves, that has reduced significantly as banks have got used to people purchasing, and whether it be in companies or trusts, and also that there is this massive pent-up demand for banks to place capital into the mortgage market. So you'll see more and more products come into the market, whether it be springboard mortgages or additional borrowing at good costs. That's great. I mean, because actually it ties in. I was going to ask you, Chris. A couple of people asked, is how easy is it to get mortgages on one of your companies? Is it easy, and are the rates really high, or are they low, or is it reasonable?
No, I mean, very much sort of echoing what Stuart just said there. I mean, firstly, I think very important to use a good broker, someone who's is an independent brokerage. They've got access to a wide range or all of the products within the marketplace. There is certainly no lack of want to lend from the banks. They've got money and they do want to lend. I think what we have seen, and this is across the mortgage market, is potentially processing times have been longer, but that is simply just from working from home, furloughed staff. In no way is it a reflection of a mortgage market that's not wanting to lend money. We're certainly seeing a lot more lenders return to the market. I think the bottom of it, if you like, was sort of last summer, sort of August time. Certainly at that moment in time, mortgage financing was a little bit tougher, again, primarily because of furloughed and working from home policies. And it was something that I think a lot of lenders found quite difficult to immediately adapt. They have adapted a lot more now. There's a lot more lenders back in the marketplace. And like I said, last year alone, there was over 41,000 companies buying investment property, of which 80–85% were taking mortgage financing. So getting financing is very hard, is relatively straightforward. The underwriting process.
Personal guarantees for that. Sorry to interrupt you.
Again, depends.
Personal guarantees.
Depends on the lender. Is the simple answer. There are a couple of lenders that you don't. Many do, and it just, I guess, what solutions are available to each individual will just depend on a whole variety of circumstances: nationality, residency, employment status. Is this a first-time investment? Is it a multiple landlord? Personal guarantees, is that something someone wants to give? Those sorts of things. So it is possible. Most lenders, particularly those offering the best rates, seek a personal guarantee, but it is possible to not.
I mean, I haven't seen any problem. As you say, it's times. I mean, we as a business, we obviously do sales, not as many as Barratt's, sadly, but we do see times to get to exchange taking slightly longer because of people working from home. Lawyers are overwhelmed. The local authorities are totally understaffed. So that does slow things down, which people don't understand especially on second-hand sales. Okay, so we touched on stamp duty. So you mentioned the stamp duty holiday ends on the 30th of June. Eustace, a good question is, this is really from me, do you have anything, and I think it's good for our people returning today, is there anything that they can take advantage of the stamp duty holiday now to complete in time? Is that possible? Is it still possible to do that?
Well, Mark, I mean, I would say it's best that we have the clients get in touch with us, because evidently a lot of people want to get onto the June completion plots. So I recommend they get in touch with us. We have a one-on-one call, and of course we can highlight some of the plots that we have that are completing by June, so they can take advantage of the stamp duty holiday. But either ways, I mean, we do tend to do incentives on stamp duty as well. So that's an incentive that we could include on some of our sites as well.
Okay, that's great. That's interesting, actually. Does one question someone asked here, do you think the Elizabeth line effect will help the prices in Western Circus?
Well, I mean, I did mention it while I covered the project. Well, you're a 15-minute walk to the Acton Main Line, which happens to be one of the Crossrail stations. So you would definitely benefit from the regen. The Crossrail's regeneration. Not only that, it's the only station where the HS2 meets the Crossrail. So it's definitely going to be a pretty important station as well.
Well, just to add to that, I think that the pricing has probably built in a bit of uplift already for the Elizabeth line. And whilst any improvement in infrastructure will always continue to drive that capital growth, I think one of the most important things is accessibility for tenants. So it may not make it, it may not get you more money, but it may make it a lot easier to rent the property out or get a better quality tenant into that property, so that they have easy access into where they work or they hang out.
That's an excellent point. I think with what tenants want, I think is really important, Stuart, because actually one of the in fact, somebody did ask about furnishing. Should I furnish my property? Do I get any more money? Absolutely, you don't get any more money. And should you furnish your property, you should check what type of property. If it's a 1-bedroom or a studio, 100% it will need to be furnished. Will you get any more money? No. But if you don't furnish it, you'll just be waiting and waiting and waiting. And echoing what Stuart said is it's what tenants want. Tenants want, our survey showed they want fast internet, because everybody at the moment, when we did that in October, everybody's focusing on working from home. But as the working from home boom slowly goes into reverse and offices start opening, and I'm sure everybody saw the Goldman Sachs announcement, they don't want anybody working from home. I mean, as this reverses, people will flock back to places that are convenient to commute to. And I think, that's why Crossrail is such an important thing.
Yeah, Mark, I think one of the most important things to consider is that through the pandemic, and we've found different ways of working. So whether it's virtual tours or whether it's improving accessibility with COVID secure precautions in place, the customer journey has changed both for residential customers in the UK, but also for investors overseas. So it's really important for investors or purchasers who are looking to move to the UK to consider their personal circumstances, talk to the mortgage brokers, talk to Chris and his team to see what structure you should be purchasing in, then talk to a trusted agent like Benham and Reeves that's independent from all of the house builders in the UK, and giving you really solid advice on local areas, schools, and all of the considerations with regards to renting the property out. One of which is a huge headache for overseas investors is furnishing the properties. So anything that we can do to make that process easier, and working with everybody in the call here, I think that the demand still remains very strong, but it's easier than ever to take advantage of the market opportunity.
Great, thank you, Stuart. So I think we're going to wrap up, but we're going to wrap up with one final question, quick fire question for everybody to answer. So what would be your number one reason to invest in London? Should we start with Stuart? You were just finishing, so go on. You may as well do your number one reason. Make it easy for you because there's so many.
I mean, Mark, I've been in the London housing industry for over 15 years now, and I think that's really the underlying fundamentals of the market haven't changed. And as you mentioned right at the beginning of the presentation, you know, the last year's growth being positive through such a difficult time really shows the resilience, not just in the housing market, but the underlying demand for future housing as well. So I think that really constrained supply. We're purchasing as much land as possible. We do bring more product to the market than any other house builder, but we still have a mountain to climb to reach that demand.
Great. Eustace?
Yeah, definitely.
Different. You can't say the same as Stuart now.
Well, there you go. Well, I mean, Mark, having worked in different parts of the world, well, I sold properties in India, I sold properties in Dubai for 11 years. What I can say, and one of the reasons I moved to London in the first place was stability. I mean, both, I mean, in terms of the job stability, in terms of the property market as well, it's been very consistent and very resilient. We saw this back in 2008, and we've seen it once again now during a pandemic. And I've had customers back in Dubai who've always used London as the benchmark for a stable market. And I'm glad I'm here.
Great. So stability, Chris?
Yeah, well, I think the demand and supply imbalance is certainly the biggest reason, and you obviously highlighted that as one of your stats with sort of the new build development starts being down this year. For me, I think one of the best things about London is the proven track record about it. I think that's what it does have over so many other cities, both in the UK and actually globally. You know, with everything that has happened over the last 50, 60 years, the London property market has always pretty much increased in value over any period of time. So, you know, I think it has that stability, it has that resilience, and it has a proven track record.
I think they're all really good points. I mean, my one, and the reason I invest myself and why I recommend everybody invest in property is because you get two things. You get capital growth and you get yield. And it's such a liquid market that even at the worst times during pandemic when the first lockdown in April last year, we did have a drop in transactions, but our government allowed us to keep renting properties. So there were still tenants moving in. I'm not saying rents were sky high because rents have been under pressure over the last 12 months, but at least you were getting income, and that income allows you to pay your mortgage and allows you to not worry about an investment that you're going to have to fund yourself. So that's there. And then in the long term, you've got capital growth. So I think that's a really strong reason to invest with low volatility and a good long-term hold. Well, anyway, that is us. And I'm sorry we've run over 15 minutes. I hope you enjoyed it. And I just want to say thank you to everybody for their presentations today. Chris, there were extra questions which will circulate to you, and same with Eustace and Stuart. And thank you everybody for joining us today, wherever you are. Thank you.
Thank you, Mark. Thank you for hosting.
Mark.
Thank you.
Thanks a lot, Mark. Take care, everyone.
Thanks.